say right off the bat that this week there's not a whole lot to talk about. So what I would like to do is just go back over a quick review of where things are. We feel things are beginning to break. Number one, we saw $8 trillion loss in the stock market in October. The total value of the world stock market, $65 trillion. We saw about a 12% loss just vanish. Paper, fiat currency, money by decree, it just disappeared. And it's bounced back a little bit, but you still got to look at that was the biggest drop since 2008. Interest rates that were raised last month by the Federal Reserve, they're talking about another increase of 1% in December. It's caused the bond market to have trouble rolling their bonds over. The debt never goes down, it just keeps accelerating. It's over $21 trillion. I've asked you to look at usdebtclock.org and look at the bottom right-hand corner and see what the value of gold and silver is in fiat, what's been created if gold and silver was at the price it should be. And then just look and think and realize that the deficit is soaring. It's not doing any better under Trump than it did under Obama. It's continuing to go. We've had tax cuts, so tax revenues have gone down. So I say to you, a stock market that's dropped 12%, a bond market that can't get financing to the point that they just started a 2-month treasury to give another option, like another candy bar in the candy store, that someone would buy it because it's kind of cute. And I'd rather have my debt in a 2-month and get a little bit more than a 1-month. But the bottom line is the debt is just going crazy. It's just compounding so fast. We're going to have over $560 trillion in $1 billion in interest alone on the federal debt. Let me say that again. Just the interest on the federal debt is over $550 billion a year and growing exponentially. So what you got to realize is, what is smart money doing? Why is the Chinese government buying up every month more and more gold, and so is Russia, and no central banks in the world are selling? The ones that are buying, the others are just staying neutral. What do they know that you don't know? Do they have a currency ready to come out, a yuan backed by gold, to contest these fiat currencies where you would have a country actual backing their currency with gold? It wouldn't be like the laws out there today where you can get bailed in. If your bank goes bad, they can keep your money legally. You have nothing to say about it, no recourse, no nothing. You lose your money or part of your money just on bail-ins that were passed. I think it was 2014 or 15. But just look at the law and realize that your money in the bank is not safe anymore. It never really was, but people would believe the FDIC had assets, which they don't. Have a very small, minute percentage of what they have covered. So you look at all this and you realize that gold makes up less than 1% of the investment world. Back in 1980, it was 5%. So if that increases, we're talking about gold at 2,500, 3,000, 3,500, and silver at a very astronomical number. Mostly the things that are affecting gold and silver, we still believe in the rumor mill still coming out of Singapore, is that JP Morgan and others are very near going out of the short positions in gold and silver and either going neutral or in the long positions. We're continuing to monitor the COT, the commitment of traders, figures on Fridays to see, and it continues to be a decrease in contracts in the short position and a slight increase in the long position. But all it takes is one day you wake up and Singapore is hours ahead of us, and by the time you can buy gold and silver to compete, it's already gone up 6 or 7%. The gold's gone up over $100, and silver's gone up $3 or $4, and it's going to happen just like that. But the very people that get out of the shorts will have it bought before you do. All you got to use is common sense and know that people like J.P. Morgan that are very astute are not buying up millions, hundreds of millions of ounces of physical silver at low prices, knowing that all they got to do is go long and other people go long, and you see that price rise to 20, then 25, then 30, and they've doubled their money in the physical market as well as made money going long in the futures market. I can't tell you how much longer it's going to be, but I can tell you I've been loading up on silver and gold for that matter, but primarily silver. I just can't see the downside risk from here. Maybe it goes down a quarter. I really don't care. But I see people that I respect out of Europe. I had a conversation with a guy in Munich the other day, and he was saying that he's been doing this 40-something years just like me. He says, Tom, I can tell you that the feeling here is the year 2019 and 2020 are going to be unbelievable years for gold, silver, and platinum, and potentially palladium. But he said, just watch the next 2 years. I've done this. I've been right on most of my calls, 2019, 2020. So yeah, you can wait and buy your metals then, that's fine. But why not buy when the premiums are low, the price is low compared to mining cost, and it has nowhere really to go but up, and it does have a potential for a slight price down from where it is right now. So anyway, I just wanted to mention that if you're interested in an IRA, self-directed precious metals IRA, you can call us at 800-247-2812. We'll walk you through that process. Or if you want to talk about the specials we have on French 20 franc gold coins or the silver round special we still have this week at an unbelievable price of only $1.02 over spot. If you buy 500 ounces or more, only 99 cents over spot, including shipping. Just think about that, because it costs, 35 to 50 cents to ship it, so per ounce. So anyway, we got that in store, and you need to look at the Wayfair Act if you're holding rare coins. There will be a tax in most states on rare coins coming up. Some of them have already started, so you need to be sure that you're familiar with that law. So anyway, with this week's Precious Metals Market Update, this is Tom Cloud signing in.